or good morning, depending on where you are. I'm Tom Sakash. I'm the Strategic Consulting Officer at Your Credit Union Partner, based in Madison, Wisconsin. And welcome to the first of four fantastic webinars that we have planned for you here at African American Credit Union Coalition. I'm just stepping in as moderator. But first, before we get into the program, I'm going to toss it over to Michelle Outlaw, who's going to provide a welcome to the group.
Thank you so much, Tom. And again, welcome everyone. We want to invite you into AACUC's Small Credit Union Sustainability Conversation and Webinar. So again, we thank our moderator, Tom Sakash, our esteemed panelists, and especially you, our audience on today. We appreciate you investing your time in this topic that is of such great significance to the credit union movement, small credit union sustainability. And so on today, as Tom said, we will begin our one of four-part series, Reimagining the Credit Union. Reimagining the small credit union is our focus on today. So some of the things that we're going to be talking about is how do we sustain and grow our small credit unions? How do we reposition or reimagine the small credit union that may be at potential risk of member attrition or merger? What does the small credit union business model look like in the next 5 to 10 years? So now to lead us on our way is our moderator for today, Tom Sakash.
All right. Thank you so much, Michelle. Really appreciate it. Thanks to everybody who just hopped in and are continuing to join as we get started here. No better way to start your week than talking about small credit unions. Me personally, I've been talking about small credit unions for the last 10 plus years as I've been in this industry. So just a little bit of background for myself. I came from America's Credit Unions, which was formerly known as Credit Union National Association, for the bulk of my time there. And I led the small credit union programming at that organization nationally. So we did a lot of things around advocacy for small credit unions, but also we created conferences, online communities, white papers, resources, and really tried to get an understanding of what it looked like to be a successful small credit union and how we could educate other credit unions and how they could sort of capture those ideas and those business models. I think one thing that's sort of interesting about the conversation that we're going to have today is that it's with a lot of our business partners or business partners who do help small credit unions. And one of the things that we found when we studied sort of the successful small credit union business model was a reliance and a partnership with strong business partners. When you're a small credit union and you have fewer resources, you can do less things in-house. It becomes that much more important to partner with business partners who understand you as a small credit union, understand what your challenges are, and understand how they can help you strategically. And so, after my time with the National Trade Association, I was approached by Scott Butterfield, who is the principal and founder of Your Credit Union Partner. And Scott was sort of like the original small credit union person before I became the small credit union guy at the National Trade Association. And there are so many credit unions across the country who sort of attribute their success to his guidance. So Scott does a lot of strategic planning sessions with small credit unions and sort of helps them think about what their strategic opportunities are and really focuses on underserved communities as well. Scott has done a great job of helping small credit unions, especially those who maybe have lost their strategic focus, maybe used to be a single SAG and have kind of lost, the thing that helped them stand out as organizations. He's helped them realize, that serving underserved communities, minority communities that are without access to traditional financial services have a great opportunity in some of those niche markets and those underserved markets. And has done a really great job. And so he invited me to be a part of the team. And so now I help Scott. I do strategic planning sessions with credit unions across the country and also do CDFI consulting and CDFI certification. That's been in the news a lot lately. If you have any questions about that, happy to answer those when we have Q&A at the end. So I'm looking forward to the session today and, the sessions throughout the rest of this program, focusing today around, reimagining the business model for small credit unions. I think that this panel today is sort of a unique and really strong group to talk about those things because we have representation at sort of every level that I think you need to have for executing on sort of a new model for small credit unions, and so that you need the leadership. So we have Sheila Montgomery, who's the former president and CEO of Florida Atlantic A&M Credit Federal Credit Union. You have Ashley Beach Reed, who is a former executive at credit unions and understands the operational sort of challenges and opportunities. And you need those operational people to make these strategies work. We have Liz Wininger, who's the CEO of Extend, which is a financial services and accounting QSO that helps credit unions with back office support. And we have Scott Collins from CU Answers, who sort of represents the core, which we know is so important to credit union business models. One thing that I will say is that I'm a board member for a credit union in Madison, Wisconsin, where I'm based out of, and we are on CU Answers, Scott. So I might have some questions for you after the session, but I'll keep those to myself. Let's get the conversation started. And I think we'll just start in alphabetical order, if that works for everybody. So first, I'm going to throw it over to Ashley Beach Reed. Tell us a little bit about yourself and your experience with working with small credit unions.
Sure. I want to first start by saying the reason why I have hyphenated my name is so that I could still stay at the top. So, Tom, you're right. I've been in the credit union space for almost 20 years. I know I look like a baby. And I had the opportunity actually to start my credit union career at a large asset size credit union. So CQ of Maryland, shout out. And I spent 14 years there. And then I left that space where I was doing amazing work and jumped feet first, head first, whatever you want to call it, into the small asset size credit union space. So I went and I left to run a 21 million asset size credit union in Columbia, South Carolina from Maryland. And I've spent the last 4 years in that particular space and have not left. And what I mean by that is I've had the opportunity now. I volunteer with AACUC since 2017, but I've been able to come in and support some of the strategic initiatives. I've also started to do consulting. So what that looks like is for me individually, I work with small asset size credit unions and nonprofit organizations, as well as I have a partnership with Firefly Consulting, which also does work in the small credit union and really just trying our best to fill in a gap. We understand, we've acknowledged the fact that resources are a challenge and partnership is so important. So the goal in this particular space is really to allow credit unions to have good partners that they can rely on. And so I've had actually the opportunity to work with Extend CU and then CU Answers with one of the credit unions that I get a chance to help stand up, which is a de novo. If you haven't heard about that, look it up and see how they have really just intentionally put together a package to support the stand up of credit unions. And then to me, also the support of small credit unions. So it's great.
All right. Thank you so much, Ashley. It's fantastic that you bring so many different perspectives to this conversation. I think you've seen, the small credit union business model from literally all sides. So excited to hear some more thoughts from you as we continue the discussion. So next, we'll throw it over to Scott.
Thanks, Tom. I appreciate it. My name is Scott Collins, one of the executive vice presidents at CU Answers. And today, St. Patty's Day, I am celebrating my 22nd year with CU Answers. I've been in and around the credit union industry for a little bit longer than that, but I had the pleasure of starting Extend, which Liz is now doing a great job of running, when we were trying to figure out how we could help credit unions survive and thrive. And part of it, and Tom nailed it earlier, part of that is shared resources and partners, right? How we can do it together versus do it yourself and have the scale from that. We're headquartered in Michigan. We've got about roughly 320 credit unions that use our core that are less than 250 million in assets. So I guess small credit union is really kind of defined by every individual differently. $1 billion credit union would probably tell you they're small. compared to a $10 billion credit union, right? So it's in our DNA to serve credit unions regardless of size. Ashley, when you mentioned the de novo movement, I am really, as the old guy on the panel here, I'm pretty excited that we actually helped 5 credit union charters launch last year. And we've got a couple more in the queue this year already. And I think that there's going to be more. So the fact that folks in the community are willing to, hang out their shingle and start a new franchise in their community is something that's very exciting. So I look forward to the conversation today. I also look forward to meeting all of you in person at the event in early April as well down in Atlanta. Thank you, Tom.
Yeah, thank you very much, Scott. And I'm glad you brought up the summit as well. For those of you who aren't aware, AACUC is continuing its advocacy in support of small credit unions by hosting a small credit union summit first week of April in Atlanta, where a lot of us who are going to be on these conversations over the next couple of weeks will get together in person to sort of flesh out some new ideas and new solutions that we can create for small credit union sustainability. So looking forward to sort of this conversation bridging us into that in-person conference so that we can come away with some actionable items that we hope to bring to the rest of the small credit union movement. So thank you very much, Scott. Appreciate it. So next, we're going to toss it over to Sheila Montgomery.
Well, good afternoon, everyone. And Scott, I hate to disappoint you, but as of May of this year, I would have been in the profession 50 years. So I got you by a few years. Sorry.
A couple.
Just a couple. I've had the pleasure of coming from a large credit union. And many of you may know Penn Air Federal Credit Union. That's where my first experience with the credit union as a file clerk. And I like to tell this story because I think it's relevant today, is that I was hired based on a quota system that they really wanted an African American to work in the financial sector, if you will. And I just happened to be a great typist. So it allowed me to enter into this profession that I had no idea that I would be in for this long, but it's the best profession ever. So I literally went from a file clerk to a CEO. But it's because of the passion and the compassion that you have for working with the communities, working with people that really don't feel like they have access to financial resources. So, someone asked me, well, why did you never work for a larger credit union? And I can say very succinctly, I love people. I love talking to them. I like them coming in my door. I like them I love for them to tell me their problems so that I can find a financial resource or product or service to help them. I've actually been a CEO of 4 credit unions. My very first one was $1 million credit union. I thought, what is this? Had no idea what $1 million credit union was coming from a large credit union. The best experience I've ever had. It really taught me the grassroots about working with credit union. In 1987 was my first GAC. Again, what is that? And I've literally gone to probably 47 of GACs, 47 years of GAC. I missed this year deliberately because it's time for me to let the young people come in and do their thing. But I am just really elated that Renee Satterwhite and the team are advocates for small credit unions. If we didn't have organizations like AACUC, this conversation probably will take place, but not as sincere as what we're doing today. So thank you for allowing me to be part of this.
Thank you very much, Sheila. Really appreciate those comments and couldn't agree more about AACUC's support and commitment to small credit unions. I said this to Renee a couple of weeks ago about the small credit union roundtable or summit that AACUC hosts at the start of their annual convention, and how it's, as someone who has organized small credit union events for a number of years, it's like one of the best, if not the best, small credit union event of the year. I think that I think AACU just understands it. They get the importance of small credit unions to their communities, and they're definitely putting the resources behind it. So greatly appreciated. Sheila, thanks so much. Looking forward to hearing your perspective as we talk further. And so we're going to toss it over to our final panelist here, Liz Winninger. Please introduce yourself and talk a little bit about Extend.
Thank you. I'm so happy to be on this panel and get to talk about reimagining small credit unions. We've heard a lot going on with African American Credit Union Coalition and everything that they've been doing for small credit unions. So I'm excited to hear from each of you. My name is Liz Winninger. I'm president and CEO of Extend. We're a CUSO based in Grand Rapids, Michigan. I got my start from Scott. You heard that. Extend started in 2002 when about 5 credit unions just threw $5,000 into a hat and they said, we want to start a call center. And the first thing that actually came out of Extend was not a call center. It was back office bookkeeping where we process, exceptions and balance the books for credit unions. And we've been doing that ever since. And we work with about 100 credit unions today, doing that every single day for them. And then we started the call center. So I came in about 12 years ago and have been the CEO here for 8 years. And I would not be where I am today without Scott. So thank you. We always go back and forth on this, but we will spare everybody on the call from that. Extend is owned by 104 credit unions, but we work with credit unions, about 300 credit unions in the United States. And that includes DC to Hawaii, all over the place. Those credit unions all sit on CU base. So we're part of what's called the CUasterisk.com network. And it's a network of CUSOs that have come together and leveraged each other's strengths to then lift all ships for not only one another, but for our credit unions. The majority, our credit unions we have about 135 that are under 100 million. And about 200 under 250 million. But we have credit unions who I will jump on the phone with them. This happened about a year ago. We introduced ourselves to a new credit union and we were talking about she needed knee surgery and it was only her working at the credit union. So she was blown away that we could process her exceptions on a stand-in basis for her, balance her books while she went out and had knee surgery. And you guys have heard those stories time and time again. We do work with billion-dollar credit unions. We do have larger credit unions, but what I think makes our network really special is that we've been able to kind of customize our solutions for those credit unions in order to make it successful for everybody. And we really, really listen to our credit unions. That's something that you'll hear time and time again. So I'll move on from me. Tom, I don't know if you knew this, I'm from Wisconsin and my grandfather is Mr. Cooperative in Eau Claire, Wisconsin. So that's where my background in credit unions really comes from. So it's deeply rooted and seated in my family. But thank you for having me.
Yes, yeah, absolutely. Yeah, I mean, and it's a great story. Specifically yours is great, obviously, Liz, but extends as well, right? And as we're here to talk about reimagining the small credit union model, I think Extend really is, one of those great examples of how credit unions are in real time actually doing that. It's not just a model of doing everything in-house, which is sort of that traditional model. It's how can we create efficiencies? How can we work with other credit unions or create economies of scales to deliver some of these operational needs that we have? And so we're going to go in reverse order here. And Liz, I'm going to keep the spotlight on you. Can you talk about, sort of the process that credit unions go through to sort of work with your organization? Is it usually that they're missing a resource, that they're without a resource and they're looking for your company to sort of fill that need? Or is this sort of something that they can add on to what they already do to sort of free up resources for their credit union?
It comes in all needs. Mainly our credit unions are just like you said, it's credit unions who have lost an employee maybe, and they need us to step in a short-term basis. And so one of the important things that we have found is that we need to have have contracts that allow credit unions to get in and out of fairly easily because they don't need long-term contracts for something like this. And in my boardroom, we celebrate when a credit union cancels a contract because they have hired employees. So one of the things that often we'll hear from credit unions is, I think my team might feel a little bit like we're taking their jobs. And so we really work with the credit union to make sure that they're that Scott coined this term long ago, up-tasking those sources. So Extend will take on kind of the entry level work that fairly entry level, answering the phones, balancing the books. And we're really proud when we're able to work with the credit union to coach an employee into a more of a strategic position within the credit union and give them resources also to answer those phones. Because how often do you hear like, I didn't get to it today. I had this on my strategic plan. I didn't get to it today because they're stuck answering the phone or just doing the little things. We even recently talked about having like a shared resource and facilities to come around and change light bulbs for credit unions. I don't know if we'll get into that, but it's those type of things that are eating the development of our young professionals today. And we want to make sure that we allow credit unions the ability to have kind of a custom approach. So it might be, hey, I don't have someone on my team who's really good at creating a HTML email. We're not good at designing emails. We're really good at data mining. So then they could do the data mining. We can send the emails on their behalf using a program that we actually negotiated with Salesforce on to give all of our credit unions access to Salesforce for $150 a month. So that's a great example of like leveraging these really great tools like a Salesforce tool and giving credit unions the ability to have access to it, use it themselves, or say, you know what, you got this, you're the experts there, we'll be the experts over here. And I have story upon story with that, including internally, where we've been able to see employees come in the call center and work their way up to VP of communications or whatever it might be.
Yeah, that's really fantastic. And so, I'm going to put the model a little bit to the test here and throw it to Sheila and Ashley, who are sort of our practitioners. In your experience working with credit unions or for credit unions, what were the big areas that you felt like you needed a little bit more resources and support on? Where could a company like Liz's and Extend really have helped you as you worked in your credit unions?
Sheila, have you go first?
Okay, I'll be happy to. Each credit union is different and the needs are different. I think the biggest thing has been resources, looking for the right people and putting them in the right places. That has been a challenge in the past, and guess what? It still is a challenge today. And so what we're looking at, or what we've been forced to look at, is how do you find this pool of people to help you to sustain your growth and help you to really help them to elevate in this profession. I often say to people, the credit union profession is the best ever. Unfortunately, we don't have that advertisement, I'm going to say, just because I can't think of a better word, to talk about how great a profession this is and how we really make a difference in communities. That being said, there was a difference when I grew up. We worked hard because that's what we were taught to do, and we learned value in it. Now we're trying to teach people how to have value so they can work hard. So it's kind of a mixed bag for us right now. But I think having the resources, people resources, and also technology. What you will find with small credit unions, oftentimes we hear about all the great things that are happening in technology, but we're late to the table. We're the last ones to take that seat. So having someone to come in and literally sit down at the table with us is such a plus, because you're busy just handling day to day. You don't have time to do the research. So those are some of the things that have really hindered the credit unions, small credit unions, from being as big as they could be, but also, understanding that there's someone there to help them get through all of that. So those are some of the challenges, but I do want to say small credit unions are like that engine that could or would. We do a lot of things and with just a few people, and that's something that we're proud of.
So one of the things that I ran into, and I don't like talking about myself, so I have to kind of like redirect my focus a little bit. When I transitioned to being at a small size credit union, and I started with reading the policies, and I was like, okay, so who's the compliance officer? Help me with that. And they were like, that would be you. Oh, okay. And when we need to do the IT risk assessment, who from IT? So IT is you. Just look in the mirror. Anything that you don't see, it's probably you. And I was like, oh my gosh, how in the world am I going to get this done? And I came into that role after the person who was there before had been there for 20 years. And then going into a space of, it was COVID. So people weren't working with each other. You weren't even in the same space. It was so challenging. So here are some of the lessons where, kind of tying back to what your question was, Tom, about where does, like, how would Extend or organizations like Extend really be able to support small credit unions? One of the biggest things is resources. So resources can be people, resources can be skill sets, resources can be then partners. I always, when I would have to evaluate a vendor, new type of relationship, I kind of had this idea, is this person that I'm talking to representing a new vendor, or are they representing a new partner? So a new vendor is, here is this box of things that cost $5,000, and you'll get these box of things. You may not have the skill set or the people to use everything in that box, but the cost of it does not change, right? A partner says, hey, listen, so I understand, like, what we offer is this full box solution. You're not at a place that you can utilize it. So either one, let's figure out what you can utilize in here and make sure you're aligned appropriately to get you to the full box. Or let's see about how we can still give you, if we can't change what it costs, let's see how we can add value in other ways. And I think understanding and I've had the opportunity to now work with Extend CU, representing a credit union. I see the focus is on how to be a partner. Where do you need the most help? If you need the help with doing the call report, or you need the help with balancing for the day, then that's what we'll do. If you want us to pull back and you need us to focus in on calls, contact center, and marketing, we'll do that. I think having that flexibility and what they're able to offer is great. My last piece on that is really then down to what we're looking for now to continue to have credit unions move forward. I think about when I came into the space, if you didn't have an accounting background for anything under, like, let's say 50 million in assets, if your CEO, right, does not have a strong accounting background, it's usually a challenge. Here's the thing. A controller or an accountant may not want to be the CEO, but you could have someone who has a strong background in strategic initiatives and marketing and community development, and is really what you need for your organization. But that skill set is so important. I mean, from a regulation standpoint, I'm going to make sure I talk very kindly of our wonderful regulators who come in. They are looking specifically to see, do you have this skill set? So being able to have a partner who's able to provide that to you, so that you can then get the right person in the seat who may not have those skill sets, but have a whole bunch of other that you need, I think is ideal. So it's really about having a partner. And I think, Extend has done a good job of explaining what that looks like.
Yeah, I think that's such a great point, Ashley. The idea of finding business partners that not only just provide a solution that addresses a need, but that also works to understand the small credit union business model. Like, there's a huge difference between those companies. That's something that we used to deal with a lot when we were running the small credit union conferences at CUNA, America's Credit Unions. We would have business partners who'd want to come in and sponsor the event. And we'd say, well, okay, how many credit unions do you work with that are below 100 million in assets, or 250 million in assets at the very least? And if they didn't have many credit unions under that asset size, it became hard for us to sort of promote them as a business partner that worked well for a small credit union, because more likely they don't understand sort of the unique challenges facing a small credit union. They're not going to have the expertise, like you mentioned, or the skill set in-house to be able to implement whatever technology or product that the business partner is providing. And so when you have a need as a small credit union, and you're looking at business partners, I think a really strong best practice is doing your due diligence and talking to other credit unions that use those business partners and really getting a feel for how that service looks in a small credit union. I think that due diligence is really important. Ashley, you look like you're gonna add on to that.
I wanted to jump in on that part because that is another big deal. When you think about what it looks like, I got there and our contract was ending, and I won't say with who, but they are very, very big. And they're like, so you're just gonna roll over, just don't worry about it, you just roll over. And I'm like, nobody wants this system. I don't want it. And so it began the process of then going and doing due diligence, going through the RFP process. Well, thankfully, because of my background and what I've been able to do at CQ, I had experience in that. But you think about, you have some new people who are excited to be in this role, and they're trying to figure out how to do that. The RFP process is difficult. So even having partners who are willing to help you and support you through those things so that you can get the right people in place is important. And you're right, in the credit union space, trust is such a big, relationships are huge, right? So if Ms. Sheila tells me that this particular partner was great and supported the credit union success, they already have a great chance of me potentially having a relationship with them. So I think that that's another piece to kind of build in where you were standing, is making sure that whoever's coming into that space really is somebody that's trustworthy with the small credit unions.
Yes, absolutely. Trust is so important. Just like, trust among your members for your credit union is, that trust is important. That same dynamic and relationship is important between business partners and small credit unions for sure. So we've talked about business partners and we've talked about talent a little bit. Sheila mentioned the talent gap at credit unions, which I think we can get into if we have time. But the other big piece of this and the other growing need for small credit unions is sort of the adaptability around the technology space. And the importance of technology delivery in financial services. Scott, working for CU Answers, I think you're a great person to bring into this conversation. And what are some of the challenges that you see from a technology standpoint that small credit unions are facing? And what are some of the things that CU Answers is doing to help address those challenges?
Well, thanks, Tom. And a couple of the points have already actually been covered by some of the other panelists. At CU Answers, we kind of look at ourselves as trying to be a three-legged stool. That stool is, you need to have a disruptive price so that anybody can afford what you do, right? You have to have access to technology. And that's a challenge for a small credit union, right? They're not going to get a vendor's attention, if you will, unless they're part of a bigger organization of peers. And then last but not least is the shared resources component, because even with great technology, if your staff and team doesn't have the ability to deploy that, then that's a big challenge as well. So it's interesting. I mentioned earlier the whole concept of do it together versus do it yourself. We're big advocates of that, and I think we've got 150 or so credit unions that are less than 50 million, right? And they're a lot of them have great financials. They're very strong. They want to serve the communities that they serve and still offer a viable solution for many, many decades. We coach them to say, you know what, don't necessarily be a bleeding edge or a leading edge technology adopter. Be a fast follower. We're really strong believers in that. Let's let the VC and the larger banks, the community banks, let them take kind of the depreciation hit, right? And those costs of those particular technologies go down over time, as we know. AI and big buzzword now. Certainly, it's a premium to get into the AI space, where a couple of years, 3 years from now, it may not be. So how do you balance that right time to go after new technology that your members need and want, and your ability to either pay for it or deploy it on your smaller staff? And last point I would bring up, and this is no news to anybody, especially in our industry. The ability for members to do anything and everything digitally that they used to do in the branch. Now, we learned that obviously during COVID, when we didn't see anybody. So, how can we have that member experience, if you will, through the digital channels as effectively as we do when that person's sitting across the desk or the teller line from us, and we can tell them how great the credit union is.
Yeah, absolutely. I mean, and there's no doubt that the way financial services is going, you need to have that capacity, right? I mean, for a lot of small credit unions, you'll ask, the boards and their leaders what their differentiator is, and they'll talk about member service. And when you think about member service for credit unions, you don't necessarily think about the digital service. You think about the conversation that takes place in a lending manager's office, and working through a credit report and really understanding a member's financial picture. But the fact is, the large majority of members don't want to come in to the branch. They want to do as much as they possibly can digitally from the comfort of their home or with their cell phone. And so being able to provide both of those things becomes even more important, right? Having that sort of flexibility and being diverse in how you provide financial services is really important. I'm curious to know, Scott, thinking about CU Answers and sort of the different services that it provides its members and credit unions, as we think about reimagining the small credit union model, are there things that CU Answers is looking at, or different sort of solutions that will help a credit union sort of add new things that they feel like their members are looking for in financial services? What are some of the new things that CU Answers is looking at?
Well, thank you for asking, Tom. We're actually going at that in a couple of ways. One is focus on technology. Right? So what can we build internally, because we serve 350 credit unions in our ecosystem, and that's a lot of money flowing through our income statement, right? So how do that's not our money. We're cooperative. That's our credit union's money. So how do we take that and pay it forward by investing in new technologies? So most of us have heard from a fintech or two just about every week, right? Especially if you're in a leadership position in credit unions. So what our owners and credit unions ask us to do is kind of vet some of those conversations. And then once we've selected partners, we will write all of the technology integrations, the APIs that are needed to be able to do that. Now, on the flip side of that, we're also working on affordability, right? So we have a little bit of an advantage in that we're the manufacturer of our toolkit for the most part. So we can do crazy things like stop charging, roll prices back, which we've done. And I commend our board of directors as 7 credit union CEOs and 2 advisory CEOs. So it's peers making these decisions to help the industry. And I know a lot of other folks in the industry have things like a scholarship program. We've got scholarship pricing. If somebody's having a hardship, they can be a very large credit union and say, I need some help because I had a major problem. One of my segs just closed the doors, right? Those kinds of things. The de novo program we've talked about, where we basically give software away for a couple of years for credit unions to start. That's exciting. But one of the things that we're doing that I think the whole group would be able to appreciate, and they do some of the similar things, is we have a mentor program where a mentor, and it doesn't necessarily need to be just the CEO to CEO. Now that's where it started, right? A CEO saying, I need a little help. I'm a new CEO. Like Ashley said, when I was a new CEO, I had a lot to learn. Well, let me have a mentor within the program. And oh, by the way, we give financial benefits for that. So if one of our credit unions steps up to be a mentor, their invoice goes down. And those are the kinds of things that we're trying to facilitate for paying it forward. I hope I answered your question, Tom, but the technology, you have to attack it in multiple ways, right? Be able to make sure that it works with the tool set that the credit union already has. And on the flip side of that, make sure it's, disruptively priced so that they can afford it. And if they can't, then ask for some help.
Yeah, yeah, absolutely. I mean, I think I've always appreciated that about CU Answers is the community. That's something that the CEO of our credit union talks about as a resource, where if a credit union is dealing with a problem, they're not doing it on their own. They can collaborate with other users of CU Answers. There are other resources out there where that collaboration can take place. And that's so essential. We talk about collaboration, like capital C collaboration, where you're truly sharing back office support. But there's also that lowercase c collaboration where you're just sharing knowledge and sharing information. And that can be extremely powerful, especially for a smaller staff and a smaller credit union. So, keeping on the subject of technology, Sheila, you obviously have a lot of experience, probably with a number of different cores, would be my guess. What are some of the biggest challenges that you faced in dealing with core processors, but also what were some of the innovative things that you did or saw around how your credit unions implemented technology or used their core systems to improve their member service?
So you did say a mouthful. I've had the pleasure of going through quite a few conversions, which are much easier now than they were back in the day. So I'll have to say technology has improved immensely. Still don't like it, but it's gotten so much better. So I'm finding that technology is really driven by staff interaction. When we have a new technology come forward, whether it's through a data processor or some fintech, is getting the staff to embrace how well it's going to help them improve their efficiencies in their jobs. So I don't want to put a damper on anything, but I've found just working with other small credit unions as well, is that the data processor come in, they do the dog and pony show, everybody's excited, and the training only lasts a few months. And then you go back to their prospective areas and they'll go back and pull some old stuff to do their work. So I think we have to pay more, put more emphasis on continuously training staff on how fintech benefits not only them, but and the credit union. That's just so critical. I love technology. I'm making, I shouldn't say making the staff, I'm encouraging the staff to start just a little bit recognizing AI. And what I've asked them to do is when you write an email, I want you to cut and paste it over to AI and see what AI says. Just getting them to embrace that this is going to be the world we're going to live in. I'll be retired by then, so I don't have to worry about that. But we've got to start pushing our staff. We bring people in to do some of the tactical things, but we also have to help them to understand that technology is our friend. And as we move forward in trying to make these small credit unions sustainable, technology is the leveling playing field for us. If we don't have that, then we don't exist. So I see a lot of that happening. We were doing a program called Smart Steps. It's a micro business loan program for small businesses. We didn't have a clue how we were going to get that done. Of course, we found a CUSA, which I believe in partnerships, that helped us to do the underwriting, make sure that the paperwork was signed properly. All of those things were beneficial to us. Of course, that helped us to get about $2 million just from our local government to implement this program. But this could not have happened if we didn't have a partner that understood what we were trying to accomplish and provided the technology to make sure that it was successful. Now, I will brag a little bit and say that because of that program, we were mentioned in the Black Enterprise magazine. So, kudos to us, because where we are, we support businesses that just want just a little financial resources. So the maximum loan is $50,000. Our sweet spot was $25,000. So what we found is if we didn't have a partner that had that technology to help us, we would have missed out not only of helping this book of business that nobody wanted to deal with, but we would not, the staff would not have been successful in making sure that we bring people in to help. So it is hand in hand, but I really think making sure the staff embrace technology is the most critical thing. We as leaders, we embrace it, we sign the contract, we get all excited, but I promise you, we do not mash a button. So we've got to make sure that staff really embraces what we want to see, not only for them, but for the credit union.
Yeah, I think that's great. And you know, I saw somebody in the chat say that I love AI, and you know, I think we all have to be realistic that the larger credit unions, the larger banks and financial service providers, they are adopting and loving AI too, because I think they all appreciate the efficiencies that technology can create. And so encouraging staff to become familiar with AI, you know, you as a credit union and as an organization looking what business partners that are out there that also leverage AI, because that means they're forward looking and trying to create efficiencies as well. I think that's the right business strategy at the moment. And I also think, you know, it accelerates this phenomenon that, you know, technology, as you were saying, Sheila, is the great, you know, leveler. It levels the playing field for smaller credit unions. So Linda Bodie, who is, I think, a board member for CU Answers, or at least used to be, and who used to serve on the small credit union committee for CUNA, her famous saying was, "There's nothing that a large credit union can do that we can't do as a small credit union because of technology." And AI is absolutely accelerating that truth without a doubt. And so, you know, definitely, you know, embrace that technology, study it, learn it, make it a part of your operations, because it will continue to allow you to do things that larger institutions can do as well. You know, I heard at GAC, just as a quick anecdote from someone who I trust and who really understands the technology space. This new business partner, and Liz might be a competitor, so sorry I'm bringing this up, but I got to do it because it sounds like a great idea. It's a call center that uses AI, voice AI, and when someone calls in, it's an AI representative, so not a real person, but someone based on technology. A voice comes out and responds to any question that the member might have. Say the person only speaks Spanish that calls in, the voice automatically recognizes that they're speaking a different language, and then their voice and language changes to meet the language need of the member. And so, you know, these types of technologies are proliferating. They're becoming more and more popular and more necessary to sort of keep pace as a credit union. So absolutely great advice, Sheila. You know, Liz, I am curious to know, you know, what are some of the things that you're hoping to do with Extend, you know, new solutions, new ways to help credit unions, you know, with their economies of scale and their back office? Anything else that Extend wants to dip a toe into?
Yeah, so just in the call center alone, there's so much technology that is being implemented into platforms already. So we're seeing credit unions go out and they're purchasing an AI platform because AI is hot right now. But like Scott said, it is, are you able to incorporate that AI platform into all of your platforms that you use, whether it's your core or your contact center software or your marketing software? So I would encourage credit unions to kind of wait for those technologies to be those software companies to incorporate an AI component into what they already have, or find a partner who does it really well. And at Extend, we have a great, we did a huge evaluation. We moved onto a new platform about a year and a half ago. And what you just said is something that we're actually looking at implementing here, because it's going to cost our credit unions less money. So instead of having to pay for a person on the phone to answer the call, we will use that AI agent to be able to answer the phones 24/7, so that members can have access to the things that they need access to when, like, it doesn't make sense to even have a body in the building at 1 a.m., whether it's risk or whatever it might be. But we've talked about this. I think Scott could go on about this for a while. I mean, since we started the contact center, we've said, oh, what if we went 24/7? And what we've found is it really just becomes a marketing piece. until you have the member who needs access to something at 2 a.m. So having the AI agent is going to be huge for us. And that AI agent is going to be able to, like you said, speak in a different language potentially. They're also coming out with a lot of the software, contact center software tools, and we'll be incorporating it, where we'll be feeding up the information to the agent. So we all know those members who call in and they want to talk to a person. They don't want to talk to the AI agent. Like regardless, they want to talk to Susie because Susie's the cousin's sister's uncle, whatever. And Susie always knows it's me. And so when you call in, the AI software is able to deliver up the answer to whatever the member is calling about. So it shortens the time for the call, again, reducing the cost to the credit unions. So we're super excited about those tools. I don't see them as competition. I think if I did, we would. I think if I did, we would be in a different spot. Scott used to teach me like stop being so parochial. I came from PricewaterhouseCoopers, so like, you know, the day before I left, I issued $1 million credit to a company. It was a company in bankruptcy, actually. And then I came to extend, and I have a client saying, you owe me $25 because this message was not great. And I was like, what in the world? And now fast forward 12 years later, and I totally understand why that $25 is so important, because I need to deliver a good product to you also. So every little piece that we look at, and on those software tools that we're implementing, we're making sure that it's going to deliver an ROI to the credit union, to the end user too. And we're in a really great position where we get to talk to members. So we send emails for members also. So something else that we're bringing out is we just rolled out it's a journey program. So we have different journeys where it's like your new member joins and you need to talk to that member in a certain way where typically like credit unions might handwrite a card, and that's very, very nice. However, I don't have a checklist of the things that you want me to do as your new member at the credit union. I need something that says, you need to log into online banking. Here's your next payment. Here's this. So we've rolled out a couple different new pieces to our new member onboarding journey, where members say, okay, I checked this off. Now I need to do this. Now I do that. And it speaks to them very directly in what they have or have not signed up for with the credit union. And it's at no cost to them. We also do outbound calls to members after they join. And this is something that if a credit union is not doing, I would highly recommend you're calling your members within the first 30 days. We have seen increases in products and services per member, and that's all the free stuff that you give them. Again, have a valid email address on file. You're saving money for the credit union. You got to have those calls with your members, and they love these calls. They don't take long. They're like 2 to 5 minutes long at the most. And you're calling the members who joined last week. So it's not going to be a massive amount unless you're maybe like a Notre Dame Federal Credit Union where you've got an influx of students or something. So a couple things that we rolled out there. Fractional leadership is really important. We're seeing a lot of credit unions that are struggling or not surviving because of the CFO position or the VP of accounting position. And so that's an area that I would lean on a shared resource for. So if you have like 3 credit unions who want to get together, maybe it's credit unions across the country, so you don't feel like you have that merger possibility. And I know Scott and I would love to connect you with credit unions who could create, 3 credit unions sharing a CFO. So that's fractional executive position. I would also add to that it is important that vendors or QSOs are not controlling the strategic plans. We can absolutely give input, but it's important that the credit unions are saying, and the board is saying, I understand the strategic plan. We're all on board with it because we agree in the impact of this on our community. We don't control that strategic plan and that initiative. Although we might give you opinions or whatever, you're the ones that are making those decisions for your communities. That was a long answer for you.
Yeah. No, I mean, it's all great stuff. And I think it all touches on different things that, that we've heard around sort of new ways to think about, staffing and technology at smaller credit unions. When I was at the Small Credit Union Roundtable at GAC a couple of weeks ago, we had someone talking about a CFO, a shared CFO that she had with 2 other credit unions. And, when you think about the salary that a CFO commands these days, you might not have the ability or the capacity to afford that level of talent at just your credit union. But the other thing is you might not have the work for that person as well. You might only need a third of someone's time. And so it makes all the sense in the world to try to look for those opportunities for partnerships, because it can lead to you having the ability to access that talent that by yourself you might not be able to. So thank you for sharing all those great ideas. So we just have 4 minutes left, which is crazy. I just looked at the clock, and Aisha, I think, is frantically telling me we only have a few minutes left, and she needs to do a couple of closing remarks. But I'm going to put you on the hot seat here. Got 4 minutes. Let's use our brains as hard as we can, as powerfully as we can with the last 4 minutes. I want you to share, because this is an important conversation leading into the Small Credit Union Summit, what you think is the greatest challenge to small credit union sustainability into the future. So think about it for about 5 seconds, and then who's ever ready to answer that question. And we're gonna keep building on these conversations as we lead into our summit in Atlanta. So whoever's ready to answer that question, please feel free, and keep it short.
I'll start off and say talent. We do need the talent to make sure credit unions are sustainable.
All right, thank you, Sheila.
I'll go next. So one of the things that a lot of the things that Liz says, I was like, yes, I absolutely agree with. The one thing that I would tweak is where we talked about saying to wait until. And I think that the challenge that we have, especially in the small credit union space, is we take too much time. We need to start being a little bit more agile and just trying something, because it's worth moving forward versus waiting. So.
Oh man, if you could speak that to every small credit union across the country, yeah, make it happen. Start the work right now. Oh, I love that, Ashley.
My sales team would love to hear that.
Yeah.
I'll piggyback on that really quickly to what Ashley said. In order to do that, we're a QSO. Most of you have either looked at or done businesses with QSOs. I think QSOs in general provide a tremendous potential strategic advantage for speed to market, like Ashley mentioned, shared investment, shared resources, like Liz. So and we're having the National QSO meeting in Vegas on the 14th of April. I hope to see a ton of people there, because that's how you learn about these shared resources organizations that are helping credit unions thrive.
And I think it's my turn. I would say reject the belief or the thinking that your credit union is too small. Ashley, I totally agree with you, and like get moving on things. We always talk about the stoplight and how CEOs are at they're running stoplights, and their team is like back here feeling that whatever. But reject the feeling that you are too small. To that Linda Bodie, she long ago had people take pictures of cash, and they would text or email in a picture of the cash sitting on their table, and she would deposit the cash, and it would be on the honor system, and they'd come in and put the cash in the credit union. And it's ideas like that it's like, why not? Why can't we do it? So reject the feeling of being too small.
Yep, love that. All right, well, thanks very much. Really appreciate all of your perspectives. Thank you for the work that you do to support small credit unions. And we are really looking forward to future sessions as part of this series, and of course, the in-person summit.